to us as education in the past was really marketing dressed up as something else. But I think now in a newly regulated environment, we're seeing a real opportunity for true education to come forward with this. So starting off with something like this, advisors do well to identify resources for themselves, true expertise, independence. And I would say one other item, to keep it short, Bob, is that often because of the environments you're in, you'll need to look outside of your environment to get that education. Depending upon what kind of organization you're associated with, your introduction to this type of information internally might be limited. So this is a good opportunity for you to fill in some of those gaps.
Thank you. Antonio has a comment.
Yes, what I'd like to advise, suggest to the advisors, we're merchant bankers. So that means we would be looking up to you guys to help us with financing our deal flows. If you could specialize in certain sectors, for example, health, and the reason why I'm so much for health, like I said, we're going through a great recession right now. In bad times or boom times, health will always be a necessity. But if you specialize in particular health sectors, that makes you an expert to your clients. That gives you more credibility, right? So that means I will have to reach out to you when we're looking to finance our entrepreneurs involved in the health industry.
Thank you. Okay. Nadine, what tools and resources do advisors need in order to properly advise their clients about exempt market instruments? Investments, sorry.
You'll have to forgive me here. I saw these questions literally about an hour ago. I'm the one more panel to be announced on the sheet. The tools and the resources an advisor needs to properly advise. The biggest ones for me is understand the compliance. You need to understand the market space in which you're working. You need to understand the industry in which you're working. A big part of the reason why I've taken a real interest in WEMA and being part of the members here as the board of the directors is that I want us to have the opportunity to shape our own industry. Or otherwise we see it shaped for us, right? So we either can have some input and influence in growing an industry that I think has a ton of potential, or otherwise we're just going to get a lot of leftovers from a lot of different industries and having other people dictate to us what this industry is going to look like. So education to me, and I think Rod will certainly back me up on this, is the key. Advisors, everybody in this industry needs to educate themselves. It's not taking one course, calling yourself an advisor. It's taking multiple courses. It's about being able to service your clients, being able to work with your associations, so that your voices get heard. So the tools that we need a strong voice for the industry, and that's going to be a challenge in this industry because it's in its infancy from 2010 as an exempt market. It's one of the oldest industries in the world, in my opinion, but at the same time, 2010 changed it. So a voice, a clear, strong voice for the people that work in this industry, that want to be a part of this industry is a part of their lives, is critical. And I think that's where you get organizations like WEMA that really play.
Steve, what would be the main caution for advisors and their clients about the exempt market?
Well, I think we have to put the main one. Is that better? I think if you have to look at the main caution I think you see in the exempt market sometimes is, if I look at my own product, it's a tax type product. We're doing mining flow through shares. So you get a 15% federal tax credit, which is very intriguing for some people. Unfortunately, we may or may not qualify for that person because they don't realize what type of income they're making. So unfortunately, you've got to always reverse engineer everything to make sure that it suits that client perfectly. They understand the risks involved. They realize what they are investing in. And it happens a lot on the income product side as well. People look, they need that 12 or 14% rate of return. They look at the income they can generate from that product, and they don't look at the risks they might be taking. So you want to make sure that this is very suitable for that client, depending on their age demographic, depending on their risk tolerance, depending on the amount that they can possibly lose. Because worst case scenario, you might be out that investment. So you want to make sure that they know the worst case scenario.
Rod, do you want to build on that?
Yeah, I would actually. One of the things, ladies and gentlemen, when I came to this sector from the more traditional financial services world, I recognized early on that there's was opportunities to improve the professionalism here. And the changes through National Summit 31-113 and the efforts of some of the people in the room has not completed that process. They're still professionalizing themselves. What that means for advisors from traditional environments is you'll likely to meet people in this space that may not come from your world. They may not subscribe to your values, such as the importance of an advisor and the life of their client and those kinds of things. So one of the cautions would be for you as you're identifying which organizations that you want to pick as resources to make sure that they come from the environment that is similar to your own, so that the values are the same.
Okay, thank you very much. 2 questions left. I want to spread this out somewhat equally. So I'm going to break the question number 6 up on our list here. Antonio, you can answer this question. What do you think the future trends are in the exempt market?
Thank you. I'd like to speak about crowdsourcing. Crowdsourcing grew because of technology. Crowdsourcing grew because everybody's unhappy about the present situation. So crowdsourcing is being open. With social media, now if you're an entrepreneur trying to promote or educate potential investors what your value proposition is, with social media, you're very open out there, right? So crowdfunding is a byproduct of crowdsourcing. Crowdsourcing makes everybody even more transparent, or everybody's supposed to be more honest with more integrity because everything is so much more visible now. So I would say that crowdfunding is here to stay. It may not be legalized yet for retail investors, but definitely it is legal for accredited investors. And is there an ASC, Advisor Securities people here?
Yes, there are.
Good. I'm also a lobbyist in British Columbia, and what we've been recommending to our BC securities regulators is, again, education, education, education. What we're advocating is not just giving investors investment 101. It's really investment course or short courses focused on particular industries. So it could be oil and gas, real estate, health, or whatever industry. There should be industry-specific investment courses. Remember, whether we're dealing with crowdfunding, private equity, or public capital market, how you invest is the same. When you invest in a particular a stock, a share, or debt securities, you're actually investing in a business. So don't, the investors out there, please, advisors, ask your investors to do their own due diligence as well. They just can't rely on you. It's your job to educate them how to invest. And investing is like buying into a business. There's no shortcut to making money. And building a business takes about 4 to 5 years, not 1 month, not 1 day. So, crowdfunding is here to stay.
Thank you. Ricky, do you expect that exempt market investments will become more or less prominent as a means of raising capital?
Absolutely, Bob. And the reason for that is really simple. The private equity has a hurdle rate. We don't have a hurdle rate anywhere else. And, I mean, in case of private equity was not going to be becoming prominent, we would not have a room full of you guys here. The other thing is, which is very interesting, you saw so many of these investment types. Interestingly, most of these investments have a profit sharing for the issuer at the tail end, and which is something which is quite phenomenal. The fact is that they are not participating or just taking everything away. Sure, I mean, are we going to have some Ponzi schemes and the others? But that's why we have the due diligence and whatever be the case. But private equity is here to stay, and it is becoming bigger than the mutual fund industry. And it will become bigger than the mutual fund industry. And that is why you're seeing such a huge growth right now.
Thank you. Okay, and I'm going to give each one on the panel an opportunity to answer this last question. And the question is, and then we're going to get some questions from the floor. That's a bit of a prodding. I hope that you will be coming up with some questions to ask. for some comments. We'll start on my right with Rod. Do you think there's an opportunity for advisors and their clients in the exempt market?
Certainly. One of the challenges for advisors, especially in our lifetime, is the rate of competition has required advisors to become, say, more and more homogenous with their types of services and products. One of the ways of competing in a competitive environment is to create an opportunity to differentiate yourself in the space. Because so many advisors are involved in very traditional, large branded formats, they're limited in what they can do. For those advisors that have an opportunity to be able to pick their own products and relationships, it's a great opportunity to differentiate yourself against your competitors. Good opportunity.
Steve?
That was a really good response. I don't know if I'm going to add that, but
The same thing.
Yeah, just ditto.
yeah, I was about to say that. I'm going to add. The only part I'm going to add to that is the fact that Morrison spoke this morning, and I really liked his differentiation a little bit of just the typical mix. You know, before it was typically 50% equities, 50% bonds, maybe an 80-20 mix depending on age and risk tolerance. Now you're starting to see more of maybe a 20 to 30% mix in private equity. And there is a definite case to be made to have a few illiquid investments. So I think there's a great opportunity in our space right now with that with advisors.
Well done. Antonio?
The one thing that's wrong right now is that the public capital market has got lots of defects. Please take a note of this. In the US, there's a company called Gate Technologies. It's founded by Vincent Molinari. He's a lawyer as well and works with the securities industry. And they have this trading engine that is meant to cater to the private secondary market or private company marketplace. Remember Facebook? Facebook went to the market and lost lots of money for its investors. But if you look at the history of Facebook, they made more money for the investors while trading in the private secondary market. And now with crowdfunding, the threshold to be part of the private secondary market will grow because the crowd will participate in this. The threshold in the US is 100 million market cap and higher. So with crowdfunding, that should be lower. So I would encourage all advisors, brokers, or investment bankers out there to really, really study the private secondary market because it also adds liquidity. Okay? That's very important.
Thank you. Nadine?
I think the big thing for me is if you are an advisor and you're not looking at private equities and not looking at the exempt market, I think you're missing out on a huge opportunity. And I'm just going to give you an example, and please forgive me if I don't get the name exactly right, but I do believe Michael Lee Chin had owned an AIC, which was a huge mutual fund company. He sold it in 2006. Lucky for him. He missed the 2007 rush. And when he sold that, he's been out of the market space now for a while, and the new area that it just came out, I think, in Advisor's Edge just last month before, and the new area he's focusing on is private equities. Amazing. And this is being touted now as something new. This is not new. This is a multi-billion-dollar industry. And unfortunately, the media plays a lot on your Shires, your Concretes, your Platinums. I don't know if I'm allowed to say these names or not in public, but I just did. And there's a lot of really great companies out there in the private equities world. And so if you've discounted, an entire industry because of a few bad apples, I think you're really missing the big picture. I think what you really need to do is find, some really great people to talk to, do some really sound, solid due diligence, and make a decision, because there is a ton of opportunity in this industry.
All of you are here wanting to know a little bit about the exempt world. So I'm going to share something with you, what the exempt world is looking for. It's looking for experience. You guys have it. We're looking for diversification. Well, you saw enough of diversification, but the key here is once you have to do your due diligence, sure, but what you need to find out is whether you want to be independent or captive. And when I say captive in exempt market dealers are people where they are issuers and they market only their own product. Everybody talks about baby boomers.